That's why it's an art and a science. You got to sometimes go with your gut after you've ran the numbers, or maybe you're going to be stretched a little bit. That's when you're going to learn the most. You got to pull the trigger, and you can't just be fearful and never move forward with anything.
Welcome to the Real Estate Investing School podcast. I'm your host, Joe Jensen. Our guest today is Craig Lively. Now, Craig describes himself as a father and husband first. Everything else after that. He's a software salesman, been married for 10 years, has 3 kids, ages 5, 3, and 1. He loves golf, real estate, triathlons, and all things money. Welcome to the show, Craig. How you doing, man?
Yeah, thanks, Joe. Doing great. It's pretty interesting and wild time right now with what's going on with my career and different things like that. So stoked to chat with you, and thanks for having me on.
Yeah, for sure, man. Well, I mean, and you're in the thick of it. I mean, a 5-year-old, a 3-year-old, and a 1-year-old, that doesn't get much more hectic than that.
No, yeah, they certainly keep you on, my wife and I, on our toes, and yeah, it's a lot of fun, a lot of work. It's great.
That's awesome. So you're working full time in software, but you also have been investing in real estate on the side for, the past decade. I mean, it's interesting times in a lot of ways. I'm interested to dig more of what you mean with exactly what's going on with you, but maybe we'll back up and catch up here. What got you into real estate originally anyway? I mean, was it like, what kind of put it on your radar, and when did it click like, oh, this should be like a wealth building tool I should be using?
Yeah, that was in college. So I went to BYU and had a good buddy of mine, my best friend, and he was renting out a condo that was close to UVU campus, and he just kept telling me all the good things about real estate, and I would see the literal cash flow coming from the tenants
Yeah.
that he would get each and every month, and my eyes at it. College student, I don't have any money. Like, I'm just skimping by on what I can. And, seeing that really piqued my interest from the get go. And then, so just really tried to, that was back in, 2011, 2012, 2013. And really just started consuming as much information as I possibly could. Bigger Pockets, read Rich Dad, Poor Dad. Just podcasts and everything I could get my hands on, all things real estate. Didn't have any money to invest. And so that's why I thought that's what was holding me back at the time. But really it was, just reading, listening, and just talking with my good friend, at the time about how do I get into real estate? What do I need to do? What are the benefits, et cetera? So that was really the starting point.
So how long did it take from the moment where you're like kind of getting turned on to it, like you're like you just described, you're seeing this cash flow, like this is awesome, like this is cool. You start diving into it, learning everything you can. What was the time frame between that and when you actually purchased your first investment property?
Yeah, it was about 2 or 3 years. And then the very first house, I got married. We didn't have any money. Like, I started marriage, it was like $0 in the bank account. I spent money on the ring, the wedding, all that stuff. And I'm like, all right, well, I gotta figure this thing out. So, we saved up, about $7,000 in 6 months. We bought our first house in it was like January or February of 2015. And like, I like to call it the extreme house hack.
Okay.
Because it was in Provo. We bought the house, and there were, tenants upstairs and downstairs, and we moved into the basement. And we remodeled the entire basement. And
So there's an
my wife,
upstairs, downstairs, and a basement.
no, upstairs, main level, and the basement.
Okay, so you kicked the tenants out of the basement and moved in there.
Yes.
Gotcha.
Yep. So there was actually nobody in there in the basement. And
Perfect.
we renovated the whole basement. My wife likes to say, we started our marriage living off of dirt floors because, the floors were dirt at some time. We did the kitchen, all that.
Yeah.
Um, and then at that point, the lease expired on the main level. We moved upstairs. We got tenants in the basement. And that's when we put the spare bedroom. It was a 2-bedroom on the main level. We put the spare bedroom on Airbnb. So
Mm.
we had the spare bedroom on Airbnb and then the basement with tenants. And so we were making about $500 a month living in that house, by renting the basement and doing Airbnb, in that spare bedroom.
I
So
love that. And
that's
it's funny
that's what I
because
like to call the extreme house hack.
yeah, no, that's pretty extreme, especially when it's like, oh, you're not single anymore, you're married, but you're still renting out a room and whatnot. But I think it's really cool because that's actually a super unutilized aspect of Airbnb. It's just like, yeah, just rent out a room in the house you are in. Nowadays Airbnb is like a hotel chain, it feels like. You know what I mean? Like no one like it's just these homes that are bought for Airbnb, prepped for Airbnb, have maids for Airbnb and coasters. It's like it's a hotel chain, but it's like it doesn't have to be that. It can literally just be like, dude, you want to crash on my couch? Like, here's 50, pay me $50 or whatever. You know what I mean? Like, it can be pretty low key, and there's more and more of actually a market for that today than ever because Airbnb was that for a second, but then it turned into what it is now. And so it's like no one's doing that. There's nothing affordable. I mean, Airbnb is more expensive than hotels. So it's like, where's the alternative? So anyway, I think that's cool that you guys did that and were willing to, sacrifice a little bit of privacy in order to kind of just build your guys' future.
Yeah, and it was mostly just, young couples just like us traveling through, or, like a single traveler, and that's, you got a bed, and that's old school Airbnb right there,
Yeah,
like you said.
love it.
And so yeah, I mean it certainly was a sacrifice. Like, yeah, we had our home, but we weren't really like living in our home. It was like sharing our home basically. But that's when things changed, and we were like, yeah, let's we'd been trying to have our first kid, and when that happened, we're like, all right, we need a little bit more space, a little bit more privacy. So we did the house hack again on our second home purchase, and it was a bigger home, better home, and we just rented the basement out on that second home purchase. And so we did the house hack all over again, which I think those two decisions right then and there, like, just shaped, to where we are today, right? That's sacrificing on the short term on those for, just as you're getting started, and, cutting your teeth into the world of landlord and home ownership and all that stuff.
Mm-hmm.
But it really sets you up for success, later down the line.
Well, and something I want to mention is like it's so vital, or not vital, but I think it's so helpful the earlier you can get into it because real estate is such a time game where it can really change your life dramatically over 10 or 15 years. You know what I mean? Like, but year one or two, it's not going to be cool or sexy most of the time, but you bought, this is almost a decade ago when you first started buying. And it's like the equity you have in those properties, is huge. I mean, you've made hundreds of thousands of dollars beyond all the cash flow and tax incentives and all that, just in the value of those going up. But it was so important that you got in as early as you did. And so if anybody listening now, and if they're like, oh, I'm not quite ready or whatever, it's like, dude, just get in with a couple little house hack things. And then those will, if you do nothing else, at least in 10, 20 years from now, like it'll be life-changing if you did nothing else. But if you keep going harder, obviously you can go bigger, but time in the game is huge. And so I feel like I was renting out a basement. This apartment couple came in to tour it, and they were like, trying to talking about living there, and I was like this isn't good for me because I like you guys, you'd be good tenants, but go buy a house. Like, what are you doing renting? Like, you're a young couple, like, oh well, we're not ready for that. I'm like, you don't get it. Like, this is the exact time to do. And even like I say, whatever it takes, well, we can't afford it, it's like, rent out the bedroom, rent out the basement, put the garage on, there's some platform for renting out your garage, like
Neighbor. Yeah.
neighbor. Yeah. Like do whatever it takes to flip that bill. And I've never met anybody that regretted. They're like, oh yeah, so bummed that I got that first property and we sacrificed so much. It was so annoying. Like, I wish I'd never done that. Like, I've
Yeah.
never heard that story, and I've done
Yeah,
hundreds
no,
of podcasts, you know?
no, not at all. And I want to make this point clear too. Like we basically drained our savings. And this isn't probably the most, recommended approach. Like just to, we did a 3% FHA, like this was the bottom of the barrel loan that you could possibly
Yeah.
do, right? And it was, really, really small down payment at the time. Not small, but big to us, small, generally speaking now. But we did that exact same thing on home purchase number two,
Mm-hmm.
5% conventional, right? And it's
Love it.
like, look, it's like, just do what you can to get into the game at the earliest stage possible,
Yep.
and that in and of itself, it pays dividends for sure.
Yeah, you won't regret skimping and scrounging and finding a hustled way to make it work on those first few deals, And it's usually you're scrimping and scrounging and hustling because it is so early on in the game. You don't have any money and you don't have any experience. You don't know what you're doing. But if you wait until it's easy, you waited too long. If you wait until you have, a 20, 30% down payment, and you can afford a huge mortgage, and you don't need to rent out the basement, like you probably waited 5 or 10 years too long. Like you should have done it when you were like, how the hell are we going to do this? And like you do it a couple times, and that's a great foundation. And then like, what I want to mention is like, this is for people like, if you want to be a real estate investor and go hard, that's a great experience. But even if it's just something you're going to do on the side to build your wealth and kind of set yourself up, even though you're going to have like a normal full-time job and everything like that works too. It's customizable, but it's a good practice for everyone.
Yeah, yeah. I mean, it's like in jumping forward to right now. So I'm in software sales, and it was last Wednesday that I got the email, and in the 10-minute Zoom call saying that I've been laid off.
Oh, wow.
So I mean, it's about as fresh as you can get, right?
Yeah.
Um, and there's, a lot of people that I know personally that look, it's, when you lose your job or you get laid off,
It can be
it's,
devastating.
yeah, it's a scary, frightening, devastating, really anxious and stressful time. Um, I have been fortunate enough to, I'm in this position where I'm not, shaking in my boots or wondering what's next and things like that. So, and that's basically just due to real estate.
Yeah.
So it's, it certainly pays its dividends. We're talking about the first two deals up until today. Like, you know, my current, we're currently renting right now. We recently moved to California.
Mm.
And, our rent is covered. It's completely covered
From your
with
cash
cash
flow
flow
from your real estate. Because how
from our
big is your
rent.
portfolio now?
So right now it's 6 doors.
6 stores. Cool. And
Yeah,
it's like, I love that because it's not 100. You know what I mean? It's not like, oh, we're making $1 million a year, but it's like, dude, you lose your job. You're like, but our rent's covered. We can buy food. Like, even if I don't go get another job for a while, like, we're okay. And like, that's a huge, huge, just like, I don't know, living not on a margin that, you have the choice to make sure how to pivot and what you want your next step to be as opposed to being forced into something. Like that's the powerful aspect of having a little bit of residual or passive income, beyond just like, ooh, free time and freedom. That's what everybody talks about. But it's like, it's in these tight moments that start to put people deeper and deeper in the hole. And so that it makes it even harder for them to ever get out, or gives you the time and the peace to find your next pivot. And it's like, oh, this actually turned out to be the best thing in the world for me, and it's cool that you set those building blocks so long ago. So you'd be ready for it.
yeah, absolutely. And not necessarily like, the benefit isn't just coming from passive investment or passive, cash flow, quote unquote passive, but it's having the skills to go and generate active income as well, right? We're talking flips, wholesales, like there's, just finding the deal, right? That's a skill
Mm-hmm.
that will never go out of style.
Right.
No matter who you are, right? There's so many, you have all the different exit strategies, but you know, the one and one thing only that every real estate investor wants is what? A good deal. So,
Yeah.
I just completed a flip in Indianapolis. This was 2 months ago,
Cool.
all remote. And so, again, it's like the passive cash flow helps you on the day to day to kind of ease your mind. And then you also have the opportunity to go, not necessarily, maybe not, or replace your W-2 income. So, there's so many different paths and avenues that can benefit you, short game, long game in real estate.
Yeah, I love that. I used to do sales as well, and I remember like thinking, man, it's like I'll always have a job if I want a job. It was like there's 1,000 places that'll hire a salesman, today, right? And it's kind of similar with real estate too. It's like if you ever lose your job, it's like if you know the real estate game and you're willing to hustle and put in some work, it's all there for you. You know what I mean? Like you said, from just straight up even bird dogging, if you're super inexperienced, just finding leads to become deals, or you find the actual deal, or you wholesale it or flip it or what. Like if you're willing to learn this industry, you'll never have to be like, oh, there's no chance. What am I going to do? I'm going to sit on the sideline and like hope I don't die or whatever. Like, I don't know what people do who have no marketable skills, but it's like, if you do have no marketable skills, that's okay. You don't need to go get a 10-year degree because it's too late for that right now. You need something today. Go get into sales, go get into real estate, and you will always have an opportunity in front of you. It's that simple. So, but I want to back up a little bit then. So, now you're doing, said remote investing, you're living in California, you're flipping homes in, the other side of the country almost, in Indianapolis, I think you said. What was your first like non-house hack primary kind of live-in investment? When was like an actual, just like straight up investment? And then what kind
Yeah.
of deals did you do after that?
Yeah. So we had, done a couple house hacks and then a slow flip. And then it was in uh, beginning of 2020 when I actually pulled the trigger. And it was March of 2020 when the whole world shut down.
Yeah.
Um, and we were supposed to close like March 25th.
Mm.
I think of the pandemic started like March 15th, and that's when like the Utah Jazz with Rudy Gobert, like those images are just like burned in my brain. But it's like March 15th is when we were
Wait,
sent
so for
home.
those that don't know, expound on that image that you're talking about with Rudy and the
Oh
Jazz.
yeah, Rudy Gobert. He's like, I think he's like touching all the microphones and like I don't know if he was like spitting on them or touching all the microphones or whatever. And nobody really knew what was going to come right after that. But yeah. So, and I'm not even a Jazz fan. I'm born and raised in Sacramento, but was living in Utah for about 10 years. So yeah, it was in March 2020, and I'm like, what am I doing? Like, the whole world is shutting down, and here I am buying a rental property that I've never seen. This was in Indianapolis. I'd never seen it in person. I had built my whole team remotely: agent, lender, insurance, property management, handyman, contractors. Like, I had done all the legwork in building my team. And yeah, I was set to close in March, and I went through with it. Even though I was like, man, this is crazy. I don't know what's going to happen. And, who knows what's going to happen with real estate, with this whole thing going on. Went through with it. And, yeah, it was an awesome investment, right? I mean, that was, in 2020, if you could get real estate in 2020, you were, hindsight is 2020, but a smart investment. So
When you're getting it at
um,
3% interest too.
yeah,
So
yeah,
it's like,
exactly.
the prices hadn't exploded and the interest rates were super down. And it was just like, I want to dive into that deal a little bit then. Like, how do you find a deal on the other side of the country? Like, how did you do that? And how did you know that it was going to be a good deal and not just a money pit?
Yeah, it was leverage the expertise of the professionals in that specific area and region. And I had done all of the research across, the US and said, okay, where is the best place for me to invest? I want to buy more real estate. In my opinion, Utah was too expensive, quote
Hmm.
unquote. It's all relative. And so I looked in Indianapolis. I looked at all the other states, and Indiana has real estate friendly laws, landlord friendly, great taxes. Price to rent ratio was great, and it had upward net migration, right? People coming from Chicago or from other areas to Indianapolis. It's a growing tech community there. So, yeah, for all those reasons, I'm like, yeah, I need to pull the trigger in Indy. And my wife is actually originally from Indianapolis as well. That was just an
Oh,
added
nice.
benefit.
Yeah.
Yeah, I would have bought a home in Florida or Ohio for all that matter. Doesn't really matter, but I wanted to be the best investment. And then I just started. I interviewed probably a dozen agents, lenders, and property managers, probably a dozen each, and
Yes.
found the three best that I felt jived well with me and were well versed and professional, and leveraged all of their expertise. Found the home on the MLS. It was an owner occupied home. They were selling it. It was really good condition, and it was like a C plus area. And I bought it for 92K. I was like, yeah, let's just go for it. 20% down. And and it turned out to be a great deal. Like it's worth I've actually just recently sold it because, in my opinion, I had pretty much double the equity that I
Hmm.
that when I purchased it. Sold it for 180K. Appreciated quite a bit, and then cash flowed for 4 years
Yeah.
while I owned it. So, and
Love
then
that.
did that a number of different times, and then got into flipping as well by leveraging that network that I had built over years in Indianapolis.
Is that where
Um,
you've done most of your purchases in? Is in
yeah,
Indianapolis?
so I have two properties in Utah, and then have held on to two in Indianapolis as well. Sold a few, flipped a few.
Yeah.
So yeah, it's split between Utah and Indy.
I love, like, for those that are listening, that like that was gold. What he just explained. Like, people are like, "Well, how do I get into it?" I get asked this all the time. How do I get into remote investing? Because, like I say, if you're trying to buy for cash flow, it is harder in Utah, right? And different things, especially if you're trying to buy turnkey. It's just like it's a difficult thing. But if you people are like, how do I get out of state? How do I buy remotely? And you gave the exact formula that I tell everybody. I'm like, go talk to five. I say five, but it does, it's even better. Five real estate agents, five property managers, five lenders, like, and then ask them all who's the best one and refer them around. And you're gonna start seeing this like triangulation of like, these are the legit ones I want to work with. And you get to interview them, see who you vibe with. And it's like, it's it's so simple, but like, how many listeners are gonna actually do that? Who's gonna actually call, 5 or 10 of each of these, interview them all, ask for referrals, see who refers each other. And then once you do that, now you have that networking, you have so much strength to just tap into their expertise, like you said. And it is a simple thing. It'll probably take you a couple days to get a hold of everybody, but you will be light years more prepared once you've done that than just looking at Zillow for a couple hours every evening. Which, how many people think they're real estate investors, want to be real estate investors, and we're just looking at Zillow, but we're not taking any action because we're just looking at Zillow. You know what I mean? Anyway, I love that formula that you spelled out. And it's funny to hear you say it that way because that's exactly what I've been preaching for so long. I'm like, that's all it takes. You don't need, it's not that complicated. You just got to do it.
Yep, and that's vanilla real estate, right? That's not
Yeah.
even like, going into finding off-market properties and marketing and,
That's it. You found it on the
wholesaling.
MLS. Like, this was just a listed normal 20% down. Like, it doesn't get simpler than that. And here's the thing: I've built almost my entire portfolio that way. Just turnkey, out of state. If it works, I just bought it. Like, it doesn't need to be super crazy and creative to still be, powerful and effective.
Yeah. So, and that's really what's, and I completely agree, right? It's like, you're always going to have questions come up as you're going through the process. And that's why you have to have a trusted expert, right? To go to lean on. Real estate is neighborhood by neighborhood, street by street. That's why having an investor friendly agent is so important. And then, hey, can I put a 15% down, or is 20, or, multifamily, okay, 2 plus, you got to have 25%, or,
Hmm.
what about a DSCR loan? Like, you got to have all of the experts in your corner to navigate, a creative solution, right? You want to put the best foot forward in each deal. And so, you're not going to have all the answers, but that's why it's important to have your team.
How did you vet out the properties? Because I do also caution people that I'm like, everybody has an agenda, right? The agent wants to sell a house, right? A property manager wants to get your property management fees. Like they all have an agenda. No one cares about your money and your situation as much as you do. And a lot of real estate agents don't even know what a good deal is for an investor. They're just like, oh yeah, there's a great area, or that's a bad area. Don't buy there. And they have no idea like what's going to cash flow or be a headache or what's not. How did you navigate the advice that you're getting from these experts to make sure that it applied to you, and how were you personally vetting things on your own to make sure it was what you wanted?
Yeah, so that goes back to, yeah, there's a number of different factors there. So I've created my own rental cash flow cheat sheet in my Excel sheet.
Yes.
And you're going to include all your capex, all your PITI. You're going to include um, everything, right? In Indy, it's there's snow removal. In other markets, you're not going to have, like, you just want to think of all the different things that potentially you might have to spend money on, and gauge. You're going to leverage an inspector. You're going to leverage the agent, and I would also. This goes back to leveraging mentors as well, and there's I personally, I found a Facebook group, Indianapolis out of state investors. And there's it's a really active Facebook group, and you're going to find people in there that are maybe not so willing to help, but some that are willing to help.
Isn't it
And
wild how much people are willing to help in the real estate space?
yeah,
Like,
yeah,
like
it's,
it blows my mind, like how much people are willing to just help for no benefit, no reason. I think we're just all like addicted. We're like so high on it that we're just like, oh, everybody's got to try this. Like, take a hit. Like, I don't know, like why but we just love it, and it's like that everywhere. There's so much support that it's crazy to me. Have you
yeah.
found that as well?
No, yeah, and that's for me too. Like, hey, do you think this is a home run deal, or is this a pretty good deal? Would you say yes or no? Like, I'll pop up on my phone or whatever, like run the numbers in few 5 minutes or whatever, and say, yeah, I think that's a pretty good deal, or
Mhm.
no, I would pass on that. Like, I'm always willing to look at things, and do I have time? No, I don't. But it's like, yeah, we it's just it's fun. Like, we just want to pass on the good word, right?
Yep.
It's just a good time. So, um, but yeah, and I would say when you want to leverage somebody else's help or leverage a mentor, um, it's much easier to go to that person and say, hey, this is what I've done. Like, don't be too overbearing and give them the whole rent roll and P&L, right, of the past 2 years, and every data point in the book. But just say, hey, here's what I think. Here's my first take. I ran the numbers. It looks like this one probably would pencil. Here's why I like it. Like, do you think that I should move forward with this, or like, what's your gut check? Like, keep it really simple if you want to leverage somebody's time or their mentorship. Um, but that's what I did. And
Yeah.
it's you're asking fellow investors that are more experienced than I am, and to get their take. But it really comes down to putting in the time, um, and having a little bit of fear, right? Like, you're never gonna know every single situation, or potential repair in a property. But that's why it's an art and a science. You got to sometimes go with your gut after you've ran the numbers, or maybe you're going to be stretched a little bit. But that's when really you're going to learn the most. And you got to pull the trigger, and you can't just you know be fearful and never move forward with anything. So yeah, that's my take.
Yeah, no, I love that. I like one thing you said, that you created your own, what I call an asset analyzer, a deal calculator. Like you created your own Excel spreadsheet where you could look at the expenses and look at the income and run the numbers and see what your return would be. And like, I think that's so good. Like I have a really, I love my asset analyzer. I'm like super proud of it. I like collect deal calculators and stuff. In fact, I'm
Yep.
like, I hope Craig will share his with me. Like I
Yeah.
love to collect those, and then I'll always add more and more to my spreadsheet as I see features I like. And I give this to students, and I get it to people who are interested. But I do feel like at the end of the day, I'm like, go make your own, because you will be forced to make sure you understand what's really happening on the calculator. Like if you literally had to create your own, you're gonna have to dive into those formulas. You're gonna have to dive into like, why do I have this category and this category and this category? And you don't need to do it from scratch. Like I said, get Craig's, get mine, get a couple and look at them, but then build your own in a way that goes with the way you look at things, the way your brain ticks. And you'll learn so much through that process of really dialing it in, and you'll be able to run numbers faster and analyze the deals quicker because it's so natural, because it was built off of your thought process. But you'll learn a lot through the process of building your own calculator, as opposed to just downloading one and half of it's confusing. You don't know why it's there and you're kind of overwhelmed. And it's funny because my process with that is that's how it was with me. I'd look at all these calculators and it's like, that's way too much. Like, I don't
Yep.
understand this. So I made this really, really simple one. And then over the years, I made it way, way complicated, right? Because now I understood it all. So then I added another feature, another feature, another feature. Now I've got this big, crazy one with like all these different pages and stuff. And I'm like, man, that might be too confusing for a newbie. But a newbie needs to go like start their super basic 5-line one and expand from there on a way that they truly understand. So anyway, I like that you mentioned that you made your own. I'm kind of a nerd when it comes to deal calculators, so I wanted to jump on that.
Yeah, yeah, for sure. I'll send that over. Yeah, and then you have to learn what how much do you need to put away for all the capex items, right? Or
Mhm.
what is cash on cash? How do you calculate that? Or what's cap rate? All that stuff, right? So, and that's only going to serve you as you get into more commercial deals, right? The big boy deals, right? Where you're looking at storage facilities, or you're looking at small multifamily or apartment complexes, right? Like that. The devil is in the details when it comes to commercial and understanding the metrics and the formulas and the numbers, right? And that's really what it comes down to. So that skill is again going to pay you short term, but also sets you up for success long term.
100%. So let's talk a little bit about just kind of like money and investing in general. I know you have a big passion for just like money as a tool and as a game and like what it all is. How do you see real estate as part of that, but maybe kind of just broader? What's kind of your perspective on, why should someone invest in real estate as opposed to other stuff? And what are your favorite other things? And just kind of your view on money and how we leverage it with real estate.
Yeah, so real estate is certainly number one in my book. It is my always my go-to, and I know there's a lot of other things, right? Like you've got individual stocks, you got crypto, you've got trading options, you've got the list goes on and on. But for me, what's tried and true, something that I know personally, is real estate. I have a little bit in crypto and Bitcoin and stuff, but that's not something that I have taken the time to learn and understand. And that's more of like a hedge investment. But real estate to me is, we talked about this earlier. It's, it's a skill that can do a lot of different things for you depending on how you leverage it. So um, that's why I like to go there. But in terms of money, yes, I have, some 401k Roth IRA, backdoor Roth IRA with, some, index fund investing. That's what I like in terms of just, stocks. I just go index fund. The Simple Path to Wealth, that book will sell you on index fund investing, is better, as good as any other. Um, but yeah, and also just in terms of money, like, when I didn't felt like I didn't have any money, which we didn't, my wife and I, we did 3 weeks in Europe. And that was all due to credit card hacking and sign up bonuses and things like that. Right. So I wanted to invest in real estate and I wanted to travel. Didn't have a ton of money. So that's where we just had to figure out a way and get creative.
That's
And
cool.
so, the real estate is certainly paid for itself. And then, traveling, like, I still try to just use points whenever we travel. You're put everything on a credit card, for real estate or personal, and then use, sign up bonuses and the points that you have. And that you can go down a whole rabbit hole with credit card points and things like that and bonuses. But leverage that stuff to your advantage as well. But you got to be smart, of course.
Well, the cool thing, like, when you're doing that, you're leveraging these points and credit cards and all this stuff to like for your luxuries, for your play stuff, which allows you to actually pour the real money into the real estate properties, into your investments, into your, actually building your wealth. And so it's like if you can get creative and be a little like creatively, not you don't have to be frugal, but if you're creative enough, you can, like say, you want to travel 3 weeks in Europe off being creative. If you can be creative on your self-entertainment and luxury, then it allows you to go even harder on investing, which will just set you up. So that's really cool that you guys are able to do that. I'm like, listen, man, I need to get more credit cards. I have like one credit card and I get the points and I cash them in or whatever. I like don't know. I'm like, I should probably dive into that more. So that sounds great.
Yeah, yeah, absolutely. I mean, yeah, we just got back from Maui, and I would say, like, I don't know, I would say 50 to 75%. I would say, solid conservative number, at least 50% was paid for by, points and, credit card stuff. Like, so
That's
it's
cool.
real, absolutely, and, provides family memories. And the kids certainly love going down the slide and being on the beach, right? So yeah, it's good.
That's cool. I love it. What would you say has been some of like kind of the guiding principles or values or even just kind of like the vision you've had as you've been going through all of it over the past decade of kind of building your portfolio? And has there been any kind of like guiding principles as you've gone through it?
I would say it's just a matter of, focusing your time and your effort on, investments rather than putting that time and effort into buying things or,
Mm,
luxuries. And, as you do that, like, you're going to, the money, your active income, as much as you can possibly put into, real estate, specifically for me and for what I would recommend, and for many of the listeners here, the better off that you're going to be, instead of, focusing on, the flashy toys or the flashy, just the luxuries of life, right? So focus on what's most important, and that's saving and investing in real estate,
yeah,
so that you can ultimately get to the point of, using and leveraging and having all the fun and flashy toys, and having those paid for. So
I
that's,
love that.
that's kind of like the high level guiding principle, I would say. Yeah.
And it's so important. Like if anybody that's been listening or following me for a while, that I always say your number one fiscal responsibility is to grow your asset portfolio. Like if you don't know what that means, learn what that means, but drill that into your brain and your soul and then tattoo it on your forehead. Because if you truly do that along the way, which is what you just said, right? Like spend the money buying real estate as opposed to all the luxury items and dumb things you could be blowing it on, or even the fun things and the awesome things. Like, but make sure the number one priority, like that's your number one fiscal priority, is to grow your asset portfolio. And it made so aware to me. I was recently just talking to a good friend of mine, and he was like, he's killing it. He's, making like, I don't know, $600,000-800,000 a year. Like, he's like loving life. And I was like, dude, that's so dope. And like, I'm not making that kind of money. Like, I haven't made like big money in a long time. And it is funny because I was talking to him, but then we just started talking about like net worth. I'm like, okay, let's take all your debts and address, and I was like, my net worth was more than his. I was like, bro, like in 2 years, you could like be way ahead of me if you just put your money there. Like, if you're making that kind of money, if you just went hard, it just blew my mind how important what you said is. Like, what are you spending that money on? Like, you could be growing a huge asset portfolio, or you could just be living a high lifestyle. And it's just crazy to think that someone making so much more than another person could have such a lower net worth because they just don't have any assets. If you don't buy them, you just don't have them. And it seems simple, but it's like, oh, I'll get around to it later. But it's like, no, like it takes time. Like I said, and that was a big thing for me is I never made crazy money, but over time, the things I dabbled in at the beginning paid off big, and then I could leverage that money and buy a lot more, and then I'll just do that every 10 years. And it's just like, there's so much that can come from it. So anyway, it was just kind of blew my mind when I was hearing that. I was like, man, you could do so much with that. But yeah, number one fiscal responsibility is to grow your asset portfolio, spend it on real estate, and all the other things will come as well. Just go get a new credit card, use some points, and you can go play as well,
Yep, exactly. And the with your phone alone, right? You can do practically everything, right? And that was the
Mm-hmm.
other thing. Like, somebody asked me, like, you're in Utah, you're in California, and you're flipping a house, in Indianapolis, and I've never even seen the house in person, right?
Yeah.
And so it's like, they're like, some people are just, their mind is just blown by that fact alone. And it's just like, well, yeah, because I have learned how to use Google and my phone to my advantage, right? And so that's the other thing. It's like leverage all the tools. Yes, there's shiny object syndrome, and I am certainly prone to that, but it's leverage all the tools that you have to your advantage. And with technology and all the things that you can do a virtual, there's virtual walkthroughs, FaceTime with the agent, FaceTime with the contractor. I mean, it just, those are, blocking and tackling basic fundamentals, but there's so much out there that you can just leverage if you have the fundamentals of, I'm going to put my time, money, and effort into the investment. Yeah, you can do a lot.
Yeah. Well, I love that. And like you said from the very beginning, leveraging the expertise of others, because because I do most of mine is remote investing as well. And I'm like, here's the thing, if I'm going to do a flip, whether it's across the street from me or across the country from me, I'm going to have to use a contractor who knows what the hell he's doing. Cause I'm not going to know. I'm not a contractor. Like whether it's in my backyard or not, I'm still going to have to default to a trusted contractor. I'm still going to default to the numbers and run the things, like even if it's a rental property long term, like I'm not going to go change the toilet and a light bulb. Like
Nope.
I'm not going to do that, whether it's in my backyard or across the country. So it's really all the same virtually, regardless of if it's close to you or not. And there's nothing. I was talking with a friend. He's like, oh, I just couldn't buy anything unless I could go like see it in person and touch it. And I'm like, I don't, even if I could see it and touch it, I don't want to. Like, why would I want to spend my time doing that? Like, that's the last thing I want to do. I'll just find someone else to do it, and they can happen whether they are in my yard or in Indianapolis. Like, so I just, it's not as complicated as people think, and that's when I first learned is I had properties, because at first I did feel that way. And that's what my dad taught me, like, don't buy outside your farming area. I'm like, okay, like I'm going to stay close. And
Yep.
then I started traveling for work, and I would have to do everything remotely for those properties. And I realized like, oh, it doesn't matter if they're in my backyard, I'm not there all the time to do it, or I'm busy, or I'm gone on a trip. And then once I realized I could do that in my backyard, I'm like, well, then I guess I could do that anywhere if I don't have to be there. So it really opens a lot of doors.
Yeah. Yeah. And I would say I know even some of Indianapolis better than, the area that I'm currently living in or the area that I did live in. And, like, it's just opened so many doors, right? I manage our Airbnb that's 8 minutes to downtown Indy,
Mm.
in out there right now. And it's like, you know, again, I wouldn't want to be doing any of the stuff that I'm hiring out anyway. Just like you said, I'm not going to swing the hammer. I'm not going to, clean the property on a turn for, at my Airbnb. It's just leveraging, the expertise of others in that specific area. So yeah,
Love it.
it's the way to go.
Well, Craig, this has been awesome. We're going to dive into our final four questions, so we have some time for you to be able to answer them. But yeah, this is super cool. If people do want to like get in touch with you or pick your brain or follow your journey, what's the best way for people to reach you?
Yeah, on Instagram, Lively Craig, last name, first name. That's the best way.
Awesome. Sweet. Love it, man. All right. So first question of the final four, Craig, what is your dream deal or a deal you'd love to tackle someday?
I would say so. I've been really researching and learning self-storage. And I would say my dream deal at this moment is an off-market, seller-financed, value-add self-storage facility.
Awesome. I love it. That's a clear buy box right there. I love that. It's cool. I actually have some contacts in that space too. I should get you after the call here that might be able to help you out.
Please do.
What's been one of the most pivotal books or podcasts that you've ever digested?
The one that comes to mind is probably Can't Hurt Me by David Goggins. That book changed my life because I had always thought that running was just not my, like, I hate running. Running sucks, right?
Yeah.
I've always been an athlete, but I ended up signing up for a triathlon, a sprint triathlon 6 days before it's starting, because
Nice.
of that book. And I've now
Has that
followed up.
effect on people? I've got a story I got to share too about that. It
Oh,
has that effect. You're just like, let's go.
let's do it.
6 days out, you sign up. Never done a
Yeah.
triathlon
So,
before.
triathlon. No, I
Yeah.
had never done a 5K.
Okay.
So yeah, so it was certainly a stretch, and my goal was to finish, and I did. I didn't get hurt or anything, and then I even did another one too. So another one here in California, which was yeah, a lot of fun. It changed my life. So I love triathlons now, and yeah, can't wait to do another.
That's cool. Do you have any big races on the docket that you're prepping for right now?
One in September. It's an Olympic triathlon. It'll be my third. So I did 2 sprints. And then this next one, I'll graduate up to an Olympic triathlon, beginning of September.
Nice. And then when's Ironman?
Yeah, that's another level. Maybe when my kids get a little older, we'll see.
Yeah, for real. No, it does take up a lot of time. That's cool though. Just on the David Goggins train though for a second, I was listening to his second book, The Never Finished, right? This is about a year or so ago. And I was getting all hyped on the David Goggins juice. I'm like, yeah, let's do hard things or whatever. And my buddy was supposed to be training. He hadn't even really started yet, but he was supposed to be training for the Ironman 70.3, the half Ironman in St. George, Utah. And I called him and I was like, dude, I just finished a book. Like, we should go do something. And I was like, dude, you don't even need to wait, dude. Like, let's just go Tuesday. Let's just go do the full like distance of the half Ironman. So it's like a 1.2 mile swim, a 56-mile bike ride, and 13.1 run. I'm like, let's just go Tuesday, dude. Like, we don't even have to wait 6 months of training. Like, let's go. And so we went out, 3 days later, totally untrained. And we're both active and fit. You know, it's not like we were like on from the couch, but we weren't sport specific trained for that. He didn't even honestly he doesn't know how to swim. But we just got in the lap pool and went back and forth for an hour or so, whatever it took, and then hit the road. We did the whole distance. It took us like all day and like way past the time cutoff if we are in a real Ironman. But it was yeah, dude. It just you light the fire and you sometimes just gotta go do crazy stuff. And so that's funny you did a similar thing, just that same mindset. Like, okay, I'm just gonna do it right now. Like no more waiting, no more, putting it off. Like let's go right now.
Yep. Yep. And it feels so good after you're done. Like, does it feel good doing it? No, not really. But like once you've, crossed the finish line or whatever, you've done it. Like, yeah, there's no greater feel. Like it's amazing.
I love it. And I would advise people to do the same thing with real estate. Like stop putting it off for like I said, that young couple that came to look at the basement. Like, don't rent, go buy. Like find a way. Like just go find a way, even if it takes you all day to finish the run and you're doggy paddling with a floaty, like go do the race tomorrow. Like just do it now. And then it gives you a baseline of what's possible and it changes your perspective of what you can do. It's like, go find a way to buy that property and just break through the barrier so that like you're actually playing the game and where you're at as opposed to sitting on the sidelines, because you can sit there for years and years and they could have been some of the most pivotal years, and obviously you've done well, but that was your story. I mean, you could have imagine if you had just started buying in 2011 or 12 when you first heard about it instead of waiting until 2015, you'd be twice as far ahead. You know what I mean? And it's like, even if you didn't know what you were doing, if you bought anything at that time, like you couldn't have made a mistake hardly, And so anyway, it carries over for sure. All right. Question number 3. What is one of the most expensive or just interesting mistakes that you've made in real estate investing?
I would say, I actually, so it's a duplex that I currently own in Indy.
Okay.
I bought it at a discount from a wholesaler. And this was like 2 or 3 years ago, and, I'm still holding on to it. Wasn't in the greatest area. And, I had to put a new roof on it, which, that was like 12 grand. And, there's these expenses that have popped up that I'm like, man, I honestly wish I wouldn't have purchased this. And had I dug just a little bit deeper, and again, you're going to make these mistakes. Like it's cash flowing.
Yeah.
It's not like I've lost on the deal, but, it's not in the greatest area. And, a couple big CapEx expenses, CapEx items have come up, and I'm like, man, if I had my head on straight, I probably wouldn't have ever had to deal with this headache, because I bought it in the wrong area, in the wrong neighborhood.
So what would you attribute that to? The fact that, it wasn't in the right area and there was like these expenses you weren't expecting, just so if a listener's like, ooh, how do I avoid that?
Yeah, so it was, I bought it from a wholesaler, so I didn't have an agent. And, wholesalers, they're going to want to move their deal as fast, as quickly as possible. And they're not incentivized to selling you a good deal or a bad deal, just to sell you the deal, right?
Yeah, they have no fiduciary responsibility by law to be honest or upfront, really. They kind of do whatever they want to do.
Yeah, and I have no problems with wholesalers, right?
Sure.
Like I've done a few wholesale deals. So it's like, it's a blessing and a curse, right? And so, I would say, I actually bought this while I was on vacation, with my family. And I think that was like the point where I was like, because I had bought like 2 other ones previously pretty quickly. And I knew it was a good time, and it was like in 2021 where the market was going really well. And I think I got a little bit too ahead of myself, and didn't do all of the due diligence that I know I should have. And that, it's like, oh yeah, I can buy this deal and it'll turn out. But, I certainly haven't lost, but it's, I would say in my eyes, I did lose on that one.
Yeah. Well, and that's one thing I love about, especially long hold investing. It's like, okay, I'm in it more money than I wanted to be. It's more of a headache than I wanted. But like you say, you're cash flowing, and in the long run, like as long as you hold on and you don't lose that asset, which is my number two rule. Number one is, get as many assets as you can, build that asset portfolio, and then number two is don't lose your assets, right? Because that's when you lose that. Because if you hold on long enough, like you're going to come out way ahead, even if it was a headache and you were in it more, which is real estate's very forgiving that way if you're doing long hold investing. So I love that. Well, sweet man. Well, last question, we'll let you go, but maybe we kind of already touched on this, but I like to ask people like what they do to enjoy life. I don't know if you have any bucket list items that you're building up for what you're doing to just like enjoy why we do all this anyway. We're not really buying real estate to buy real estate, right?
Yep. So what I do, spending time with my wife and my kids, that's always the top of my priority list. But triathlons, training, I love the training aspect of it, pushing myself, and golfing, love to golf. And I would also say, traveling and seeing the world and experiencing new people, places, and food. So that's what I like to do in my free time. There's not a whole lot of it, but yeah.
Love it, man. Well, the St. George Ironman half is in 26 days, so I expect you to be there with me. So get on out here. You can crash at my place.
Yep. I'll read Never Finished, and then I'll see my name on the sign up form. So
I love it, man. Well, thanks for your time. I appreciate being on the show and sharing your stories, the wins, the losses, and everything in between. Thanks, man.
All right. Thanks, Joe. Thanks for having me on.
Absolutely. This is Joe signing off for the Real Estate Investing School podcast, reminding you to just go do it Tuesday.